Good afternoon, everybody. Hope this week is treating you extremely well. I wanted to keep this week's video short, sweet, and to the point. If you have been following these videos here over the last month or two, we have talked a lot about paying attention to the S&P 500 at the high that was put in back on January 26th. Now, the way that we were looking at this market was we had that high that was put in back in January 26th and the low that was put in on February 9th. And since that point in time, the S&P 500 has traded inside of those two zones. So we have essentially created a trading range for the majority of the year. And what we wanted to pay attention to was to see if we were going to, when we got up to the top of this trading range, head back lower once again, or if we were finally going to get that breakout after about 6-7 months of consolidation and get a push to new all-time highs, which, if happened, would be a very bullish signal here into the end of the year. And that is exactly what we have gotten here this week. We had our breakout on Monday. We pushed a little bit higher on Tuesday. We got beautiful follow through once again on Wednesday. So moving away from that breakout zone, that's exactly what we want to see. And so as long as we can continue to hold above basically that 2870 level on the S&P, we should see a nice continued push here into the end of the year. Now, the NASDAQ and the Russell, they had made new highs multiple times this year, so they were not trading in a range, but they were setting up in my favorite pattern, the ascending triangle. And what that is it's a series of higher lows, as you can see right here, and a flat top, meaning a resistance level at the same point on the upside. And so what that's saying is every time the index or the stock pulls back, buyers are stepping in earlier and earlier, and pressure is building right at that particular resistance level. And once that level breaks, you usually get a pretty good explosive quick move to the upside. And that's exactly what we've seen out of the NASDAQ this week. Breakout on Monday, a little push higher again on Tuesday, and beautiful follow through on Wednesday. So very bullish action over there. The Russell 2000 has had a number of great technical patterns over the course of the year. We had the earlier wedge breakout. And we also have that ascending triangle pattern set up where you've got that series of higher lows that's been put in here over the last month or two. A very clear resistance level at that 1707 level on the Russell. We had the breakout last week, and we talked about it last week. And we said that that was a kind of a bullish view for the overall market. When the mid or the small caps are pushing to the upside, a lot of times that shows a risk-on environment, meaning people are willing to put on additional risk when they're looking at smaller, i.e. riskier companies. And so oftentimes we see that kind of reverberate and follow through the rest of the indexes. So the Russell did lead us and gave us that view last week and continue to get that follow through this week as well. Now, we have to talk about the Dow Jones, which has been the major lagger over the course of this year. We've talked about it a number of times in these videos. And there were two areas that we were paying attention to in last week's video, and I left both of those lines on the chart. The high going all the way back to January 26th is that major resistance level. That's that all-time high, and that's what we really want to see the Dow break out to the upside for that continued follow-through. However, there's a secondary zone of resistance, and that is the high from after the bounce, after the pullback in January, early February. This was put in on February 27th, and that was the level that we were watching to see if we would make a break this week. And push back up towards those highs. So there is this zone that we are now watching on the Dow, and we have finally broken into it this week, which is bullish, but we still have this resistance level. None of the other indexes have overhead resistance at this point in time. They're all trading at all-time highs. So this is the next important level that we're going to pay attention to. As everything sits right now, the indexes look good. The fact that the Dow did break above the late February resistance point and is inside of this zone here looks like it wants to push up and attempt to test those all-time highs, and that's what we're going to be watching for here over the next week or two. But overall, there's not a lot of negative that you can say on a technical basis about these indexes. They're pushed up at all-time highs. They're coming out of solid technical patterns. The S&P 500 spent about 7 months inside of a trading range and made a breakout to the upside. So this technically is looking really good here into the end of the year. So hopefully we continue to have strong action out of the overall market. I hope you guys enjoy these videos, and I hope you guys have yourselves a fantastic rest of the week and weekend. And as always, I'll see you guys next week.